The world's top economic body just downgraded the US economy, and it could hit your wallet sooner than you think. The International Monetary Fund, or IMF, has just cut the US growth forecast for 2025, blaming Trump's new tariffs and growing trade tensions. At the same time, they're warning of rising inflation and slowing global growth. In this video, we'll break down why the IMF slashed the US forecast, what it means for inflation, jobs, and your money, and how to prepare for what's next. The IMF has revised its US economic growth forecast for 2025 from 2.7% down to just 1.8%. Why the downgrade? Three key reasons. Aggressive US tariffs, especially the universal 10% import tax and massive 245% on Chinese goods, rising consumer prices driven by import costs, and weakened investor and business confidence. These policies are meant to protect American manufacturing, but they're also slowing down trade, reducing demand, and causing price shocks. At the same time, the IMF has raised its inflation forecast for the US to around 3% in 2025. What does that mean for you? Groceries, fuel, cars, and electronics could all cost more. Businesses may pass increased import costs onto consumers. The Fed may keep interest rates higher for longer to control prices. That hits borrowers hard, especially if you have credit card debt, a mortgage, or a business loan. This isn't just a US issue. The IMF also cut its global growth forecast to 2.8% for 2025. US tariffs have ripple effects. Trading partners like Europe, China, and Latin America are facing weaker demand. Developing countries are struggling with debt as inflation rises globally. Markets are volatile as investors fear recession in major economies. The US is a pillar of global trade, and its protectionist moves are causing real disruptions. Prepare for persistent inflation, tighten budgets, lock in fixed interest rates if possible. Watch your investments, rebalance toward low volatility and inflation-protected assets. Keep an eye on commodities and international exposure. Follow the Fed and policy news closely. Any change in trade deals or rate decisions could shift markets fast. So, there you have it. Growth is slowing, inflation is rising, and the global economy is feeling the heat from US trade policy. What do you think? Are these tariffs helping or hurting the economy? Let me know in the comments below.